Now, we saw gross earnings up 49%. In fact, your CEO earlier said this was driven by strong improvements in non-interest income. Can you give us a clearer picture of this?
2011 was a great year for Sterling in many ways. We completed the ETB merger, but the key driver of revenues for us in 2011 was growth in the corporate loan book. We had strong growth in trade-type loans and other types of short-term finances. And that contributed a significant element to earnings. So apart from, trade-type loans, we had a number of short-term accommodations and this type of thing. So strong growth. We had projected to the market that we were targeting around 30% in loan growth last year. We achieved it. In the latter part of the year, the last 2 months, we took in the business of ETB, and the business of ETB made a significant contribution as well.
Now, there's been a lot of focus on cost in the banking sector. So I'd love to know, how did the bank do in this area? Of course, looking at driving down costs. And of course, what is your outlook in this area for 2012?
A key reason behind the whole ETB acquisition was to improve our scale economies as a business. We were running out of 92 branches. We had central services serving roughly 92 branches before the acquisition. That number is up to 187 central services, are now distributed across 187 or so locations. So we've seen scale benefits already kick in that respect. We've already approached a rationalization of branches where there are overlaps, and further down the road late, this year, we think that as the benefits of the revenues of the consolidated business, as those benefits kick in, the market will see stronger numbers out of Sterling.
Now, your CEO also earlier talked about a successful business combination, and you also earlier alluded to this with Equatorial Trust Bank. Now, we saw total assets at 583 billion naira. Now, analysts do question what impact the combination will have on your balance sheet. Of course, looking at the number of write-offs ETB had, and how that affected your bottom line in terms of legacy debts.
We have not seen a negative impact from ETB legacy loans. The reason is simple. The acquisition had an element of AMCON support. With AMCON coming through, we switched bad loans that we previously identified for AMCON bonds. So we don't see any potential for deterioration in the loan book further down the road. In fact, we've seen a positive contribution because the AMCON bonds are interest earning. Right, and what we see is an opportunity to switch asset classes from bonds to loans, because right now we have loans to deposit ratio at around 40%. Regulatory limit is 80%, so it gives you a sense of the potential for growth that this business still has.
Now, give me a picture of looking at 2012. What is Sterling Bank's strategy? Of course, tying into expected synergies from your acquisition with ETB.
Great thing is we've completed integration in every dimension. I think the CEO mentioned that in his earlier remarks. What Sterling is looking to do is to digest that acquisition and basically consolidate on the benefits we've already seen from the business. We have already, Sterling used to be typically not the primary bank for the clients we bank because we had capacity issues. We've doubled capacity on most fronts, capital almost double, the deposit book almost double. So the capacity to grow the business, both in the corporate and retail segment, is very strong. So I think what you will see with Sterling is a strong play within the corporate market segment, even as we continue to use the additional 90 or so branches that we've taken on to grow the deposit side of the business.
Now, I'd like to ask, CBN obviously implemented some policy changes for 2012, 2013. Was there any huge impact on the banking sector and Sterling Bank also?
Sterling, like the rest of the market, has been impacted by these changes. There are a lot of them. There was the requirement that we restructure our businesses, and focus more. Sterling has become a national commercial bank. We're seeing an impact from the payment system regulations that are coming through in the Lagos area. The Lagos area accounts for approximately 60% of economic activity.
Okay,
So,
we'll certainly be watching what's going to happen with your Q1 numbers. Thank you so much, Yemi Odubiyi, Chief Strategy Officer, Sterling Bank.